Hello everyone, in this video we're going to look at NVIDIA. It has had a fantastic run and it is still going at the moment. So we're going to look at some of the fundamental reasons why this has been happening and whether it's still a good stock to own, as well as some of the technical picture. So this stock has had almost a tenfold increase since it bottomed in 2022. It had this longer term decline, and then since then it was trading below $115, close to about 110, was pretty close to near the low, and it is up more. It's up to 1,100 and let's call it $40. So yeah, nearly a tenfold increase from about that $115 mark. So really strong performance. And why has that been? So if we look at basically what their earnings have done, the company itself, so not so much the stock price, but what the company has actually been able to do, 55% average earnings growth over the last 5 years. The median growth rate for S&P 500 stocks is about 8.7% over that same time frame. So NVIDIA growing at 5-6 times the rate of, basically you could call it a typical S&P 500 stock. So start to understand why it has performed so well when you're growing at that kind of rate. Going forward, analysts are still expecting 43% yearly EPS growth. That's yearly EPS growth over the next 5 years. Over the next 5 years. So versus 9.5% median yearly growth for kind of a typical S&P 500 stock. So all the stocks in the S&P 500, big solid companies, their average or median growth rate expected for the whole group is 9.5%. Again, you have NVIDIA outpacing that by 4 or 5 times. So really big growth. It has an A financial health rating from Morningstar. That's the most financially solid rating a company can receive. So, pretty financially sound company. It has a forward PE of 32.5, which is higher than the S&P 500 forward PE of 21. But we've already talked about it. NVIDIA is growing at 4 or 5 times as fast as the typical S&P 500 stock. So people are willing to pay up and buy that stock in anticipation of those future earnings. So it's basically moving up now in anticipation that the company is going to keep growing. The current PE ratio is about 66.5. Yeah, that's a little bit high. The S&P 500, I didn't check that number. I think it's around let's say 25 to 30. So it's, up there compared to what typical stocks are. But for a company that's growing 4 or 5 times as much as most of the other companies in the S&P 500, hey, that's why people are buying it up. Sales. You want to see the sales increase with earnings. When you have earnings just increase without sales, sometimes that can be accounting gimmicks. But when you have sales growing and earnings growing, that's a really good sign. Sales have increased an average of 47% per year over the last 3 years. And the stock is up 3,000% just in the last 5 years. So really, really fantastic performance overall. Down at $40 in 2021. So super strong performance. Technically, we are in a bit of a vertical move here following the earnings, and so it might be tough to find great entry point. We kind of had these little flat levels. These are the kind of levels I like trading off of, and you have a really weak decline and then you start moving up. I like those. When it's vertical, I usually will wait for something like this or a pullback to get in on. But we'll talk about another catalyst coming up here, which I had just noticed. Anyway, this first rally, 73%, followed by a 26% decline, 262% rally, followed by a 22% decline. So what I basically did here was just filter out any movement under 20%, because that will highlight kind of the bigger pullbacks and the bigger moves to the upside. And 148% upside followed by a 22% decline. So you can see that typical pullback in this stock is kind of in that 20, at least during this rally, I should say, in that 22 to 26% area. So of course the future is not going to replicate exactly what has happened in the past, but it does provide an estimate. If you start seeing a really big decline, such as let's say 35%, that could indicate that a lot more choppy trading or even a downtrend is starting, because it's just out of character for what the stock has been doing. Similarly, if this falters out here and then you have a big drop off, that could show some slowing momentum, because we only moved up 52%, whereas all these other rallies were able to sustain quite a bit more than that. So I do like looking at that. Technically, as I mentioned, me personally, I'd be looking to get in on a pullback or one of these little pauses. And I did see there is a earnings split coming up, so 10 to 1. So this is going to go back to about $100, $110 share price. Reversed stock splits tend to have a positive effect on the stock, because now all of a sudden, like, even to buy one share of this, you need $1,000 or $1,100. And then when it drops to 100, you introduce a whole bunch of little investors who can now, buy one share, two shares, three shares, four shares at $100, but they couldn't afford even to buy one at $1,100. So there tends to be a bit of a positive impact on these reversed stock splits. So that may be something to look into. That's coming up in June. And yeah, so that's another bit of a positive catalyst for the stock. But yeah, overall, strong technically right now, strong fundamentally, still in an uptrend. It's just a matter of finding your kind of ideal risk reward type entry where you can keep the risk minimal. I like putting stop losses out fairly quick. If I'm wrong, then I'm wrong. But if you're right, then you catch the next big up move.